So, good afternoon. We are all well fed, ready to start. Paul, the floor is yours. You need a glitch, is it?
We don't have the presentation. Pardon me, Teresa, may I get the...
Or do you want a lapel mic? Do you prefer a lapel mic?
It's okay.
You'd have to make sure that...
Okay, good afternoon. We had a very rich and interesting but unfulfilled discussion this morning. I think we got a lot of questions out on the table and maybe not as many answers, but I hope that as we proceed through the sessions, we'll continue to get more at some of the issues that people want to talk about. The session this afternoon is on the design and management of decentralized and intergovernmental revenues. I'm not intending, I guess you've seen the PowerPoint presentation, I'm not intending to go through the thing sort of, point by point. I put some more basic things up in the beginning, but what I wanted to do to try to generate some discussion is focus more on what have been some of the big issues with own source revenue, and many of them came out this morning. What have been some of the attempts to deal with this, and the same with the transfer program. So this is what we'll be focusing on. And so the key questions in the beginning, and this is just to remind us of why we care about this and what are some of the basic principles. Why is it important for subnational governments to have adequate revenue? What is the right balance between own source revenues and intergovernmental transfers? And obviously there is no single answer to that question, but it's something we need to talk about. Why has it been such a great challenge for subnational governments in many countries to get the resources that we need? And we talked about some of that this morning too. What do we know about how to best design and manage subnational revenues and transfers? And then finally, how can we make progress in improving on the status quo? So these are a set of big questions, difficult questions, questions that are easier to answer with normative principles than they are in practice. And so we'll get some of these issues out on the table and take it then from there in terms of discussion. So why do we care about subnational own source revenue? I mean, part of it is a revenue adequacy thing, that we know that local governments, subnational governments are less able to raise revenue than they are to spend. There's less of a case for them being able to raise certain types of revenue. And if they want to, this is not just for recurrent services, but if local governments are going to be able to borrow, they're going to need to be able to service that debt. Another reason is to reduce the subnational government demands on central government budgets, especially in situations where it is actually feasible to raise subnational revenue and not to rely so much on the central budget. A really critical thing for those of us who care about decentralization, and a very fundamental point in fiscal federalism is to create a fiscal linkage between the benefits received from local services and the costs of provision. This is a fundamental criteria to try to introduce an element of market-like behavior in this, where people are aware of what it costs to provide services, and they're willing to contribute to those services. And a related point that this fiscal relationship helps to develop accountability between elected councils and their constituents. It puts a different kind of quality to the interaction between elected councils and subnational government constituents if people have to put some money into the pot for the services that are being delivered by the local assemblies. And there's also a little bit of, and this is not cross-country, but I've seen a few studies emerging in the last few years that vindicate the notion that subnational government revenues are a good thing for results, that in fact there is some evidence from a number of countries that jurisdictions which rely more on own source revenue spend more on service delivery and less on administration. It's not a generalizable point, but there's enough studies out there that suggest this to be a real benefit. So the basic principles that we're dealing with, and I'm sure many people are quite familiar, the things that we should be taking into consideration when we're thinking about what are suitable subnational revenues. The benefit principle that we just discussed, people are paying for what they're receiving. You want to have taxes that are levied on immobile bases, so that the base can't flee the jurisdiction and escape taxation. You want to limit competition with the center. I mean, some of these are part of the basic framework that Teresa was talking about this morning, the things that you care about. And because of the accountability relationship and the effect that this has on the efficiency behavior of subnational governments, this issue of having some autonomy, we need to have subnational governments have access to revenues that they have some control over. And of course, the issue of minimizing the costs of administration and collection. There are simply some types of revenue bases which it's not practical to set up separate revenue administrations at all the subnational jurisdictions. So the bottom line point that we take away from these principles is that the central government has inherent advantages in revenue generation, because some of the most productive taxes are not on immobile bases, and so on and so forth. So there's some, one has to be careful of having redistributive taxation, for example, at the subnational level, the effect that this might have on decisions about where people will live, and other types of taxation, indirect taxation. We've seen a lot of this in the U.S., for example, where differences in sales tax bases cause people to cross over the border into the next state and make purchases. And so these kinds of things matter. The bottom line is that the central government has inherent advantages in revenue generation, while subnational governments can normally manage more functions than they can pay for. And this is something Ed Sham will talk more about tomorrow. So that tax sharing and transfers are inevitable, and we know that. So where does this leave us in terms of the kinds of taxes which are available? Well, people often recommend the property tax. It's fairly common to use various types of business-related revenues and user charges and so forth. But most countries, if they even get this far, don't get into more sophisticated types of taxes. There's an underuse, for example, of motor vehicle revenues in developing countries, not in some of the bigger federal countries and a few other cases, but this is an issue potentially because many of the costs of motor fuel use are imposed on local governments, and yet they don't have access to a tax handle to deal with these things. And other things like natural resource revenues, which of course inherently are going to stick in regions which have those natural resources, and therefore are inherently disequalizing. And then there's some places, particularly at the provincial or state level, have subnational VAT or some type of piggybacking. So it's a little bit difficult to neatly summarize, but there's a set of basic local taxes. There's a set of taxes which are more appropriate for urban areas or intermediate levels of government, but some of these kinds of taxes can't really be collected at the local level, and so these are done through some type of tax sharing or piggybacking. And the other thing we know is that there has been a lot of experience with local revenue sources that have been fairly productive, but that are considered by economists to be bad taxes because they violate some of the basic principles that we were just talking about. So for example, the use of the octroi in South Asia and other regions, which is a tax on interjurisdictional commerce, the Regional Services Council levy in South Africa, which was it's a combination payroll and business tax that has been heavily criticized and was recently abolished, but for years it was hard to get rid of because it was very productive. The graduated personal tax in many of the East African countries. So you had this tradition of using tax bases in some countries which were very productive, but violated the basic principles that we were talking about. But because they were so productive, they're very hard to get rid of. So now I'm going to skip through fairly quickly most of these slides, but I just wanted to clearly distinguish between the true own source local revenues, where local governments have some control over the base or the rate and administrative responsibility, and the flows are based on the local tax base. And at the other end of the extreme, a pure grant, where the center controls all these decisions and either on a discretionary basis or based on a formula distributes them to the subnational governments. And then there are options in between where subnational governments can ask higher levels to assist them to collect taxes that they don't have the capacity, or surcharges or piggybacking, where you've got where subnational governments are allowed to piggyback a certain amount on a tax base that's already established and collected by a higher level. So we have this range of options, and these are obviously the big differences are how much control, how much of the autonomy that Teresa was referring to this morning is actually in place versus how much control the center has. And if the center has a lot of control, then the issues we were discussing this morning about how those resources are allocated among the jurisdictions becomes important, and we'll come back to that. So some of the problems that we've observed pretty widely, and one of the most recent attempts to do a global study that I had seen on this was a study done by United Cities and Local Governments last year that I can give people the reference to. But there still has been this tendency for central governments to keep bases that they should not necessarily have, and to heavily control the bases that they're that they do allow the local governments to levy. So you end up with situations where even something which is called a local tax, and a rate increase may have to be approved by the central government in some countries. And so these things start to mess with the definition of an own source revenue. We have poor information on revenue bases, and this makes revenue administration hard. Too many unproductive sources. Pak Marwanto, I remember when I started working in Indonesia, there were 60-some subnational government taxes, and 4 of them collected about 90% of the revenue. That they have all these other taxes lying around out there. Countries use property taxes to try to spur development rather than focus on raising revenue. We have the case of off-budget or unofficial revenues. We've seen this in a number of countries. Of course, China is the case which is best known for having these types of revenues. And many of the political interference and capacity issues that we talked about this morning, of course, are relevant in this regard. And one thing that also came up this morning that I really want to emphasize, that the tax issue is not just a technical issue. You can have the best property tax in the world, and if citizens don't trust their local governments and they're not willing to pay those taxes, it doesn't matter which textbook principles you follow. And I think that this is something that we don't pay enough attention to. So some of the kinds of common reforms that we've seen are to focus on revenue raising rather than other policy objectives, increase levels of autonomy. Of course, the issues we were discussing this morning about, is autonomy automatic, or does it have to somehow be earned because local governments are certified to be behaving in certain ways, to be following certain rules? Focus more on the use of a limited number of productive sources, get rid of the unproductive ones, get rid of the problematic and unofficial ones, but this is difficult, of course, if they're going to be very productive. And sometimes, you know, I'll let Pak Marwanto talk about this later, but for example, the Indonesians have been getting advice for decades that they should decentralize their property tax. They've done it. Now they're worried if they've decentralized it, it's voluntary. Are local governments going to collect it, and do they have the capacity to administer it properly? So there are these other issues when you're talking about giving additional autonomy. And of course, some of the standard tax reform bits about improving information and simplifying tax structure and administration. But this last one I want to say a bit more about, how important it is to create better linkages between public services and local revenues. In many of the cases that I've seen where there have been increases in local revenue generation at the level of individual local governments, it's been because local governments have negotiated with particular actors, a chamber of commerce or something like that, to say, we need you to pay more tax and we're going to do this or that. So we're going to fix the road to the industrial area, but to do that, we have to borrow. And to borrow, we have to be able to pay back the loan, and therefore we need you to pay your property taxes, and we may need to increase them a little bit. This is something that I think we really neglect these issues. So some of the political economy factors, I think, I'm going to skip over some of this rather quickly, but a couple of points that I'd like to make. We talked already this morning about how national politics can affect subnational revenue. But at the subnational level, I think that there is a tendency to assume that if you have local elections and if you have a solid framework, that revenue collection will follow. But we know this isn't the case, and part of the case gets back to this connectivity between citizens and businesses who are paying the taxes and the elected councils. And so we've had this wave of participatory budgeting and participatory this and so forth. And some of this is useful, but it's one of these things that, just to give a concrete example, participatory budgeting emerged in a very particular political context. It emerged organically in one place in Brazil, and it got picked up and shipped around the world in the form of a manual where all kinds of other things were not in place for it to work properly. And so when we're thinking about establishing this political connectivity, we really need to think about how to make it happen on the ground in particular cases. So the national framework has to be right, the incentives have to be right, but there also have to be, there has to be a set of relationships at the subnational level if subnational revenue policy is going to work. Now I'm going to skip some of this because I don't want to run out of time talking about this, and I want to link this back to the transfer side. So in addition to the own source revenues, we know that the focus of transfers is to improve general revenue adequacy and alleviate vertical and horizontal fiscal gaps. And we do these things out of a sense of fairness, out of a sense that some basic services need to be provided for development and growth, and of course to reduce interjurisdictional spillovers. We see this with providing certain services. Now we have these different instruments: general purpose unconditional, conditional matching, and project grants. And so the trick becomes, for a particular country, what is the main objective of the transfer, and how does the particular type of transfer that you're selecting meet those objectives? So if you want to encourage, obviously, spending on a particular service, then a conditional transfer, maybe with a matching ratio that encourages local revenue participation, would be important. But if you want to encourage redistribution, then probably a general purpose grant is formula driven is going to be a better instrument. On the other hand, if you can't tweak that, Pak Marwanto will talk about this. In Indonesia, they're starting to use conditional transfers to deal with redistributional issues because they haven't been able to change the general formula. And so there are different ways of combining this, and this is why I don't want to draw too much general rules, but just to get us thinking about the kinds of transfers that you use in your own countries and how they relate to this set of issues. The other issue of the pool of the resources, is it a specific share of revenues as it is in the Philippines or in Indonesia? Is it an ad hoc decision from general revenues? We don't like this generally. We think that there ought to be rules. But on the other hand, some countries like South Africa have done a pretty good job of supporting local governments without having a fiscal rule about the pool. And so again, I don't want to be too slavish about adherence to particular principles. But we do know, for example, that obviously if you're going to have transfers on the basis of origin of revenue collection, that it's going to be disequalizing. And so we need to think about that. How important is equalization, or how important are other objectives which can be incorporated into the transfer formula? How many places actually use true fiscal gap formulas where you're using norms to measure revenue capacity and expenditure needs, which would be the ideal way that you would deal with fiscal equalization. So there are many ways to do this, and countries pursue different objectives. Now, some of the common issues that we need to think about are the issues we discussed this morning, right? Balancing the macro control and subnational stability and on autonomy. what kinds of objectives do you really care about? Are you more concerned about priority expenditures? Are you more concerned about redistribution? What does that imply for the structure of the system? Measuring these variables is very difficult. This is why we don't have better transfer formulas, because it's so hard to capture the things that we may want to capture. But some countries have so many different transfer formulas, some of which are ad hoc, some of which are formula-based, that it's hard to figure out the overall impact of transfers. Some of them are very complex. We talked this morning about subjectivity. Is there, do local governments know the basis on which they're getting their allocation, or is the allocation non-transparent? And perhaps most important, the weak linkages to own revenues and to borrowing incentives and other intergovernmental fiscal reforms. How can you, even if you set up a good borrowing system and a good local tax system, you do a great property tax reform, if your intergovernmental transfer system is generous and does not create an incentive for own source revenue mobilization, then all your property tax reforms are not going to work, unless there are other pressures for them from downward accountability pressures. Similarly, in some countries, the intergovernmental transfers are so generous for infrastructure that why would I, as a local government or state government official, go to borrow, even if I can afford to borrow, even if I'm creditworthy, even if I'm borrowing, even if I'm developing a self-financing project? Why would I? Why would I if I can get transfers? So these things are really important, and the fact that we don't monitor the impact of performance enough, I think, is a big issue. So some of the kinds of reforms that we're seeing are to regularize the transfer system, to ensure a rule-based minimum of subnational resources, and we saw that this morning the case of Ecuador has been doing this, and many others, thinking about how to get an appropriate conditional and unconditional balance, and to make sure that you don't have transfer programs that are very complicated or are offsetting each other in unintentional ways. And one of the ways that we do this is to increase transparency and improve the data. A huge problem in many countries has been the lack of attention to equalization transfers. And I could give you a lot of examples, but I've been hearing from the Latin American colleagues this morning that this really isn't done sufficiently in Latin America, and it's not done very well in much of Asia either. And in the Philippines, there's been a debate since the development of the IRA, right, the Internal Revenue Allotment. It is not it is not a redistributive transfer, and so if you're not going to use equalization transfers, what are going to be the impacts? And what are the political economy factors that would allow you to think about how to do this? And I think another issue is better targeting conditional transfers, but you can still allow a certain amount of subnational discretion. Now, we already talked about this, the need to improve the linkages between the transfers and other components of the subnational government fiscal system, and I'm sure this is going to come up in our discussions. And something that Etcham is going to talk about a little bit tomorrow is this increasing trend to use transfers as a way to promote reforms. So this wave of everybody lumps them into what we call performance-based transfers, but in fact a lot of the performance-based transfers are actually compliance-based transfers, especially in early stages of decentralization, where countries are rewarded through the transfer system for adopting some of the framework aspects of the framework that Teresa was talking about this morning. So are these good? Are these bad? What effects do they have? I think this is something we'll talk more about tomorrow. And then lastly, to improve the monitoring and performance of the transfer programs. So we need data not only to better target the transfers, but also to better measure where the transfers are going and what effects they're having. And in many countries, we don't have much of either. And I think this has to be a big priority. And the last slide, I just wanted to, again, in the spirit of the discussion we were having this morning, that there is this ongoing tension between central control and local autonomy, and the perspective of local governments about transfers and own source revenues and so forth is going to be different than the perspective of a national government, which is trying to create a climate of macro fiscal stability. So the central government may want to control local finances and equalize and stimulate tax effort, and the subnational governments, of course, they want local autonomy. They don't necessarily, the rich local governments don't want their resources flowing out to poor local governments, and they certainly don't want to face incentives to have to generate more revenue from the constituents who elect them. So it's how we navigate these tensions when we're looking at the revenue side, and how this fits into the larger framework issues that Teresa was outlining for us tomorrow, and that Ehtisham will continue a discussion of tomorrow morning. So I'll leave it at that. I'm sorry that it was. I wanted to bring a few more examples in, but I think that we're going to hear a couple of cases. Other people are going to bring some things in, and I think that for some of you, some of this you're familiar with. For others, some of it may be new, but I wanted to put out on the table for you this set of issues, how they relate to the larger framework issues, and now I think we'll turn to hear some country experiences. Yes, and so I'm sorry. First, as the format we started this morning, Teresa and Ehtisham will make some comments and additions and so forth, and then we'll move into the country presentations.
Shortening my presentation and keeping to the 10 minutes allotted, I'm going to skip a part of the comments which had to do with my main sort of conclusions from Professor Smoke's presentation. And I'll focus instead on the results of a study that has been conducted, and I've been very involved in coordinating the study by the IDB, on subnational own revenue mobilization. This study involves 6 countries, the 6 large countries in the region: Brazil, Argentina, Mexico, Venezuela, Peru, and Colombia. And I have summarized very briefly here the main results. Eventually, we will have a book which will present these case studies. So a broad overview of subnational revenues in Latin America. This is more for the benefit of our Asian participants than of the Latin American participants, because they know this quite well. Decentralization has moved a lot faster on the spending side than on the revenue side in Latin America. As a result, the gap between own revenues and spending responsibilities is quite large in most of the countries. The imbalances also are large within, or the variance of the imbalances is quite large within each level of government. There are, as Roberto was saying today, subnational governments that practically fill most of their spending responsibilities with own revenues. This is primarily the case with the large cities, and then there are others that are very, very dependent, both at the regional and at the local level, on central government transfers. Generally speaking, the vertical gaps are larger at the regional level than at the local level, because local authorities have well-consolidated source of revenue, which is the property tax, although it's not fully exploited, and I'll talk a little bit about that. There is an exception in this sense in Brazil. In Brazil, the vertical gap is smaller on average for the states than for the municipalities, and this is also the case in Argentina, the two large federal states, but it's not the case in Mexico, not large federal state. There are also substantial differences across countries in the design of intergovernmental transfer systems. The diversity of the subnational revenue systems in the region implies, therefore, different reform priorities. In some countries, this is particularly the case in Mexico and Venezuela, and less so in Bolivia, Colombia, and Peru, an increase in own revenues at the subnational level is needed to raise the overall tax ratio. That is to say, the total tax take is too low, tax burden is too low, to finance an adequate level of public services, and also to reduce the dependence on revenues from non-renewable resources. This is, for example, very much the case in Mexico, as I'm sure Emilio will say. In all countries, with the exception of Brazil at the state level, a reduction in vertical imbalance is needed to increase subnational fiscal responsibility and political accountability. So although in the case of Brazil, although in some countries, it's not necessary to raise additional subnational revenue to raise the tax ratio, because the tax ratio, like in Brazil, is already relatively high. It would be desirable, for example, in Argentina, to have more own revenues to shift the balance between subnational and national revenues to increase responsibility, fiscal responsibility, and political accountability. Subnational tax reforms are needed in many countries to improve efficiency. For example, the reduction of predatory tax competition under the state VAT in Brazil. Brazil is one of the few countries in the world that has a state VAT, state level VAT, and since this is origin-based, it is given sort of scope for extensive tax competition. Perhaps our colleagues from Brazil can witness to that in the next in the question and answer session. And there is a need to reduce the cascading under the provincial transaction tax in Argentina, which is basically a turnover tax, very productive but very distortive. And there would a need also to replace the payroll tax, which in the state level payroll tax in Mexico, which creates a lot of incentive for informality in the labor market. There are options to improve the performance of existing subnational taxes, primarily the elimination of very widespread exemptions and incentives. In some cases, there is also scope for increasing actual tax rates. For example, at the municipal level, many municipalities don't they are provided a band within which they can set the property tax rate, but they stay all at the bottom of the band, or most of them stay at the bottom of the band, instead of exploiting the scope that is being provided in the legislation for increasing the rates. There's ample scope for improvement in subnational tax administration, both in terms of modernization of system and procedures with assistance from the central government. Brazil represents a good example in this respect. The central government has, with the help of the IDB, really supported both states and municipalities in improving their tax administration. There is clearly a need for modernizing property cadastre. there is a lot of informality still in the registration of properties in the large Latin American cities. And there is a need to improve and make more systematic the exchange of information with national tax administration. Again, in this respect, I think Brazil is a good example because they have now created what they call a synchronized register of taxpayers. So that facilitates a lot the exchange of information. There is a need for assigning new tax handles especially to the regional government, because regional governments, with the exception of Brazil, don't have really adequate tax handles. And here, unfortunately, the scope is limited because national tax system have a lot also of improvements and reforms to be done in many countries in Latin America. Regional personal income taxes or regional surcharges, piggybacks on national PITs. The main obstacle here is the fact that the personal income tax is very not productive even at a national level due to high threshold, too steep progressivity of the marginal tax rate, high degree of labor informality, and so on. Regional or local retail taxes, there is more scope there as the distribution systems in the country become less atomized and less informal. But again, this is something that can work reasonably well in states in certain, at the regional level or in large cities, but not certainly, does not represent an adequate tax base for primarily rural states or municipalities. And regional VAT, the main obstacle is the difficulty created by interstate trade. There is some scope for improving subnational excises, but of course in some cases, like excises raised on services that are important inputs in the production process, like electricity, it can have efficiency costs. The reform, there is also need for improvement in the transfer systems. The case studies provide quite robust evidence that the design of transfers affects the degree of subnational own revenue effort in the region. This is particularly the case with discretionary transfers. Formula-based transfers do not seem to have as much of a discouraging effect. So transfer reform should concentrate on reducing discretionality and increasing the flexibility of the formula-based transfers over the cycle. This study confirms some of the things that I was saying this morning. And there is also, as Paul mentioned, the need to refine existing equalization mechanisms in most of the countries of the region. Thank you.
Whilst Christina puts up my presentation, let me just make a couple of points. I think one should start by asking what taxes do. Taxes, of course, is not just raising revenues, but taxes have effects. Taxes affect incentives, production incentives. Taxes affect distribution and households. And taxes are evaded. So I think what one has to do in any tax policy framework is to look at all of those issues together. What are the effects of the taxes on revenues, on production, on distribution, and on incentives to cheat? And that's what countries are dealing with. Now, unfortunately, many countries put in lots of exemptions for distributional purposes, or exemptions or gaps for investment purposes, maquiladoras or border rates, or this exemption for friends of the president, or exemptions for the prime minister's nephew, etc., etc. So those tend to proliferate. They don't have any effect on distribution, and they tend not to have any effect on production either. So if you were to think of an investment regime which is neutral, then you probably would not have to give special deals in the tax system. And if you had a social spending system which took care of the poor effectively, then you wouldn't have to give exemptions on the VAT or holes on the income tax or special provisions for Mr. This or Miss Y. So I think really one needs to start off with the policy framework, not just at the local level, but at the federal level and the local level, and look at the effects of a tax system and then decide where you want to go. Now let me come to Paul's very nice presentation. I agree with everything he said. So I will focus on just a couple of issues. I want to stress the need for accountability. And you're looking at you're not looking at completely eliminating, say, the vertical balance. Not even Australia or advanced countries do that. What you're looking at is giving handles at the margin and making sure that local governments use those handles. So you're looking at the incentive structures that come about through some access to own source revenues. Own source revenues defined as having control over rates or the base, not necessarily administration. It's control over rates that gives you accountability. And having a transfer system that gives you the incentives to use these taxes. So really what you're looking at is not eliminating the vertical gap, but having sufficient control over rates at the margin. And of course, the key point is that you don't need to have administrations at each level to do that. You can actually have a federal administration, or there is now an increasing tendency to think of an independent administration which serves more than one level of government, that can provide arm's length services to a number of levels of government. So really, in any analysis, you're looking at the policy agenda first, making sure you have something that can be administered. Because if you have so many holes as you have in Mexico or in Pakistan, and I'm going to talk about these two cases, it's impossible to administer it, even if you have excellent administration, as you do in the case of Mexico. You still can't administer it. In Mexico, you have a fabulous administration. You collect 10% of GDP in non-oil revenues. Pakistan has a dreadful tax administration, full of holes, also collects 10%, somewhat less than 10% of GDP. The question is, well, what do you do about it? Really, let's make a difference between intermediate level and local level, because that's terribly important. So at the intermediate level, you can talk about broad-based taxes. And again, there's research that we're doing at the LSE with a number of colleagues, working on Mexico, again, the tax reform agenda for Mexico, for the outgoing government, incoming government. And as my former colleague, current friend, Vito Tanzi used to say, go for something simple. VAT works best with a single rate. Full coverage, no exemptions, special regimes. But why do Mexico and Pakistan have to put in all these special regimes on the VAT? For distributional purposes or for special deals for their friends. And then once you do it, you can't get rid of them. And then you're left with a monster that can neither be administered at the federal level nor at the local level. So splitting bases with subnational governments and holes for special interests are a problem. And they provide neither own source revenues for any level of government, and of course you lose accountability. So really you're looking at a tax policy agenda together with a tax administration agenda, and you do not need to have administration at each level. And indeed, I think the example of China we'll come to in a minute if you have time. I think China had split administration, split bases. They're integrating these bases. In 1994, they set up a central tax administration to administer the VAT. For the first time in history, they set up a central tax administration and shared the VAT rates. Now they're moving towards sharing income tax rates. So integration of taxes, integration of bases. You have an arm's length administration. Australia also, in order to implement the VAT, moved it up, moved it up from the state level to the federal level. So in both cases, the idea was to have a simple tax policy agenda that could be administered promptly and easily. And China now collects 9% of GDP from its VAT. It's one of the better performing VATs in Asia. It's a pity Shushanda is not here. He could have talked a little bit more about the income tax reforms. On the local taxes, of course, you know, there is issue of setting the rates, and in setting the rates in countries like Indonesia, you want to avoid a race to the bottom. You want to avoid conflict between jurisdictions, and you want to build on, as far as you can, on self-assessment. And then the issue is who holds the cadastre and who does the valuation. And there the question is that does not have to be addressed at each level of government. And there is certain benefits to pooling of effort, both with the cadastre, as we have seen in Colombia, and valuation, together with self-valuation. And of course, you can think of business taxes and user charges, and of course, as Teresa was saying, you can piggyback on the central taxes. So let me skip the next couple of slides. I think what one needs is to think about level of autonomy in relation to tax policy and administration. Of course, tax sharing, which people think of as own tax revenue, is not own tax revenue because you don't have control over the rates. That's more like a transfer. And sometimes central governments set bans for local governments, which provides limited autonomy. And typically, surcharges or piggybacking gives you full autonomy, even though you don't necessarily have full administration. This is a very nice typology, which I've borrowed from our colleague from Duke, which shows you how you can have a continuum on tax policy and administration. And really, you're looking at control over the rates as a key determination as to whether or not the tax is local or not. And if you're looking at administration, there are a number of elements in administration. Some can be shared, and others can be done progressively at a lower level, depending on capacity. So when people say that you can't hand over a tax to a local government because of lack of capacity, I don't really understand what's meant, because you can actually get capacity, or some of these functions can be done at a higher level without losing the sense that the tax is local. Because the tax is local if you have control at the margin on the rates. And so I think the Indonesian example is quite interesting, but you don't actually have to go all the way on administration in order to keep the local element. You could have still kept the administration in the central administration, given them control over the rates, it would still be a local tax. So I think, you know, one has to get away from assuming that you always have to have local administration for a local tax. That's not necessarily the case, though. Of course, the question arises is whether you have confidence in the administration that's collecting on your behalf. And there it would help, particularly in countries like Pakistan, if you had confidence, each level of government had confidence, say in national tax administration, which reported to the Council of Common Interest, and that was considered to be independent. Let me just stop by talking very quickly about transfer design, because any badly designed transfer can negate any incentives you put together on the tax side. So if you have fiscal dentistry, as my good friend Govinda Rao used to call it, gap-filling transfers, that would destroy any incentives you get from all the other reforms that you're doing on the intergovernmental side. Similarly, how you actually calculate the transfers is important. In Scandinavia, in China, you have standardized bases for equalization transfers. Some countries are moving away from standardized bases to actual revenues or actual needs. That reduces it to the fiscal dentistry. and should be avoided if at all possible. So really you want to look at equalization for clearly defined current responsibilities, but for investment, you need to come back to earmark transfers, perhaps on a performance basis, like a reform DAK in Indonesia. So, or as the ADB is talking about, you want to get outcomes, and the outcomes are more clearly defined for investment transfers than for current transfers. So, you really need to look at a combination of transfers meeting multiple purposes. So really, you need to think about what multilateral agencies can do. There's an exchange of information, help define policy options. There's a lot of very good research that's going on around the world on what is policy design, what are the effects on incentives, what are the effects on revenues, on households, what can be done at the subnational level, not necessarily administered at the subnational level to qualify as a subnational tax. And therefore, you need to then think about the support for federal agencies or independent tax administrations, as well as for local administrations where relevant. Stop.
Thanks. Amelia, would you like? Oh, I'm sorry. I'm depriving you of your tea break. Is that right? We're supposed to? Yes. Yes. Okay. So we'll be back in 3:30. In 10 minutes. Okay. This is a quick tea break. So you'll have to run. We'll see you back here in a few minutes. Okay, I think we're going to try to stay on time. We have one or two people that have heard us start and are running in. So we're now going to hear about the Mexican experience. So Emilio, please.
Well, thank you very much, Paul. Thank you very much, first of all, for the invitation to participate in this seminar. To Farzana and to Roberto Garcia Lopez, thank you very much for the opportunity to be here. And so let me share with you what has been the experience of Mexico over the last years regarding decentralization of revenues. First, some background. Mexico, like most of other Latin American countries, underwent a significant process of fiscal decentralization, particularly on the expenditure side, in the late 1990s. This was driven by decentralization of education and health services, and this brought the share of total public sector spending exercised by subnational governments from around 25% in the early 90s to a peak of 40% in the year 2000. So you can see that over a period of 10 years, there was a very significant decentralization of spending in Mexico. However, just like Teresa mentioned, this decentralization of spending was not followed by a proportional decentralization of revenues. So as a result of that, Mexico has had over the last decade very high levels of fiscal vertical imbalances, meaning the vast majority of the subnational spending is financed through federal transfers. And here in this little kind of graph, I try to summarize the way it works nowadays in Mexico. So the vast majority of the financing comes from earmark and non-earmark transfers. The earmark are around 40%, whereas the non-earmark transfers are around 43% of subnational revenues. Local taxation is around 10%, and the last little one, the one that is 7%, which I call convenios, those are basically discretionary transfers, which I will come back to those ones because as my colleagues Teresa and Etisham and Paul have mentioned, this discretionality has consequences in the incentives in the Mexican fiscal federalism. So in this context, and a last component that is important in this scenario as well are the federal investments that happen in the different states, and that's also subject to a lot of political bargaining every year in Congress during the budget negotiation. So those two components, discretionary transfers and public investments, federal investments, mostly in infrastructure that go to the states, those are subject to a lot of political give and take between the states and the federation through Congress. And those two components have very important impacts on the incentives of the fiscal arrangement. So in this context of very high fiscal vertical imbalances and a low government take overall in a tax take in Mexico, in 2007 there was a fiscal reform which had several components, and one of those was the necessity to increase subnational revenues in order to increase subnational revenues in order to decrease vertical imbalances, right? And to do this, the Mexican government essentially followed two strategies. The first one was to expand the taxing powers of subnational governments, mostly by creating three new taxes at the state level. First, a fuel tax, a gasoline tax. Second, the federation transferred the car ownership tax that used to collect at the federal level. It was transferred to the state level. And finally, states were allowed to charge an excise on alcoholic beverages. So these were the three new taxes that could be collected at the subnational level. The second main strategy followed by the federal government on this front was to to do an effort to grant incentives to the states to actually use their taxing powers. And to do so, the federal transfers were modified in a way that those states that would collect more taxes would be rewarded. In other words, if a state would increase its own revenues, the federal non-earmarked transfers would be increased on a per capita basis. So with these two strategies, what the federal government was hoping for is that it would grant the additional tools for the subnational governments to collect more taxes. At the same time, it would give them the right incentives to actually make use of those tools. No? And a third component that is not only specific to subnational revenues, but it's been an issue that is crucial and has been mentioned in the previous panels as well, was the issue of generating reliable, timely, and useful information that could enhance accountability across all levels of government. And that's why there was a constitutional reform that was passed in 2008, which forced accounting harmonization among all the different levels of government with requirements of transparency. For instance, for the first time ever, basically, by the end of 2012, all the Mexican states would have to submit quarterly financial reports and make them public. So that's a huge change. It's a monumental change in fiscal transparency in Mexico. So these were the main efforts done to enhance fiscal revenues at the subnational level. What were the results? Well, the reform has been definitely a step forward, but it has been insufficient. Before the reform, local taxes were around 10% of total revenues. Nowadays, they account for 12%. So we still have very large fiscal vertical imbalances. And just to give an example, states are not using all of the taxing powers they have. For instance, in the case of the car ownership tax, only 19 states out of the 32 are charging this tax. So clearly this has been useful, a step forward, but it's insufficient and something else needs to be done in the coming years. So what are the steps that I think should be considered in the coming years to try to further strengthen fiscal revenues at the subnational level? And among the issues that need to be considered, I think the first one, the most salient, is to reduce the discretionarity of federal fiscal transfers. As I show you in this graph, the majority of federal fiscal transfers are already formula-based with no discretionality, but you still have a significant amount of around 7% of the federal transfers that are still discretional. And this is definitely in the margin having a strong impact on the incentives of the state governments. A lot of the state governments perceive as more profitable to spend a significant amount of time in Mexico City bargaining with the Minister of Finance, trying to get more revenues than to strengthening their own tax administration efforts. So definitely, if we want to harden the budget constraint in Mexico for the subnational entities, reducing or even better, eliminating the discretionarity of that remaining 7% of fiscal transfers would be ideal. A second issue which is a strictly political economy, what I think is of the highest relevance, is allowing re-election of mayors in Mexico to enhance property tax collection. Mexico collects around 0.3% of its GDP on property tax, which is shameful. The average for Latin America is around 1% of GDP. And I'm pretty sure that the explanation is closely linked to the issue that mayors cannot get re-elected. They can only be in office for 3 years, and 3 years is really not enough time to do any of these reforms, right? If a mayor decides to undertake the tax administration measures to improve property tax collection, they suffer the political cost without enjoying the benefits of that. So definitely, this issue needs to be addressed. An additional option for the property tax is an issue similar to what Eti Sham was mentioning in his previous presentation, in which the municipalities delegate the collection of property taxation to a higher level of government, in this case the states, which have a larger scope of 6 years. So that would be a possibility which has been attempted not very successfully so far. And finally, once all of the current revenue sources are properly exploited, a subnational VAT may be contemplated in Mexico. It's difficult to foresee a significant reduction of fiscal vertical imbalances in the coming years without the states making use of the most important revenue source, which are consumption taxes. And here I get the red target, so I need to shut up. Thank you very much.
Thank you very much, Emilio. So, Pak Marwanto, Indonesia, please.
Thank you, Paul. Yes, I do have. Well, while waiting for the presentation, well, I would like to say, well, my appreciation to having some sharing experience among the countries around the table, because we feel Indonesia is the newcomer for decentralization. We just began the fiscal decentralization soon after the Asian crisis, so early 2000, meaning that we learn a lot from Latin America, from European country, how to manage the fiscal decentralization. It is important because Indonesia consists of more than 15,000 islands. We have more than 250 million people there. We have three provinces. We have 491 local government. So in the beginning, the spirit of fiscal decentralization is that we want the local, the subnational officer also responsible for developing their own region. But then the central government has also transferred most of the money at the time. The problem we are facing right now, and we were facing at the time, is that since we have the political reform, the structure and communication between the government and the parliament is very tight, and then the government tend to be inferior compared to the parliament in terms of negotiation, in terms of decision, you know. So then every single regulation should be put in the bill, in the law. So there is no political intervention soon after the bill is decided and then launched to the people. Let me begin with the national fiscal policy. Well, since we just 11 years implementing the decentralization. We begin with the very centralized budget management at the time. And the reality, our budget was influenced by factors that sometimes could not be controlled by our domestic economy. The closest one is monetary policy. But when we are discussing balance of payment policy, then it's affected by the dynamic of movement of the international trade. So, in short, actually, when we are discussing about the local budget, the subnational budget have the close relation also with the national budget, since for the general purpose grant set in the law that minimal 26% of the national revenue should be allocated to the subnational government. And how to allocate to those regions based on the formula. So we have to be very consistent for that. If not, it is very difficult to deal with the parliament, which sometimes only talking about their constituency. The main priority of the central government is to maintain the fiscal sustainability. Well, if we are talking about the fiscal sustainability, during the last 5 years, our deficit is below 3%, sometimes even below 2%. So, for example, sorry. Now, why we are concerned about the fiscal sustainability? Because we do have the bad experience during in the Asian crisis. At the time, our total outstanding debt compared to GDP is close to 100%. So we are trying in a very disciplined way so that our fiscal deficit can be maintained between 2% and 3%. The impact for that, then our subnational government also has to be very disciplined in maintaining the deficit. Because according to our law, then the total deficit, central and subnational government, is not more than 3%. Recently, there are several criticisms because then it seems that the government is not put the attention to the stimulus economy, because we have to very, very strict to the regulation we have to maintain during the last 10 years. This is just deficit general government operation, still below 3%. So, talking about the intergovernmental relation, well, according to our law, then the transfer is used to support operation for the entire government and public services delivery. We have 3 layers: provinces, central provinces, and we have rural district and municipalities. So this is very important to have the common decision among the stakeholders in the nation that all the transfers should be allocated for their purposes. And then, according to our law, which regulate the administration of the government, the government regulation, then the autonomy actually directly goes to the 3rd layer of the government, which is maybe a little bit different because it's kind of historical decision has been made by our people at that time. So the autonomy goes to 491 local government, and the money mostly goes to the 3rd layer of local government. The kind of basic principle in implementing the fiscal decentralization is that since there are some responsibility, most of the responsibility is given to the local government, so that the money mostly also should given to the local government. So we have the principle finance follow the function. And our bill also, in our law also, that we are still learning the process of decentralization. The main goal at that time is to make everybody, I mean in the region level, the gap between the rich government, local government and the poorest is as short as possible, meaning the gap should be reduced. So then the decision goes to, well, if that is the decision, then we should implement the fiscal decentralization through the expenditure side. not through the revenue side, not through the revenue sharing or delegate some of the taxing power to the local government, which is after 10 years, we evaluate there are several demands from the rich, quote-unquote, local government, that the central government should give some more authority to the local government in managing their own tax, local tax. The goal in empowering the local tax then discussed in the parliament. And then we have the special bill regulated the local tax arrangement. And then, as mentioned by Paul, there are two big actually resources from the central government is given to the local government, which is the transfer for property taxes. Right now is under management of the local government, and right now is the land and building tax. Some, particularly the one that related to the rural and city, tax for property is given also to the local. We right now evaluate some of the impact of the devolution. The problem of using the IT is problem there. The problem if on human resources is there. The problem of tax evasion and tax avoidance is there. So this is the issue that in the future maybe the government of Indonesia should put more attention so that the devolution of property tax will be succeed in the future. When we are talking about the transfer and compare it with the total spending in the local government, so the expenditure from the local government mostly financed by the transfer. But then 80% of the transfers in the form of the special, in the form of general purpose grant. So the local government have the kind of priority to allocate those money to their priority. The problem right now is that how to harmonize, how to synchronize the priority in the national level and the priority in the local level. I think it's our homework that also we have to work in the future with the sub-national government. In addition to general block grant, we also allocate specific grant, which is most of our colleagues around the table seem to mean that implemented mostly for the earmark or special block grant or whatever the name, which is the central government have the kind of power to synchronize the priority from the national and local by the earmark or by the specific block grant. Unfortunately, in Indonesia right now, the specific grant is just accounted less than 10%. So in the future, some input goes to the central government. We should put more specific grant so that we can at least influence the priority of the local government